بسم الله الرحمن الرحيم. Assalamu alaikum wa rahmatullahi wa barakatuh. May we please take our seats as we're about to begin our panel sessions and our agenda for the rest of the day. All right. Your Excellency, Engineer Saeed bin Ahmed Al-Ma'wali, Minister of Transport and Communications, our guest of honor, Your Highnesses, Your Excellencies, distinguished guests, ladies and gentlemen, welcome as we move forward with the next part of today's agenda. We'll begin to explore key pillars that shape our collective future, ranging from local champions and community economic empowerment to people-centered progress, financial resilience, and beyond. To initiate our thought-provoking sessions for the day, it is my pleasure to welcome you to the Special Interest Session 1, SIS 1, under the theme Community Economic Empowerment and Development Impact for Oman. To guide us through this insightful session, please join me in warmly welcoming our esteemed moderator, His Highness Dr. Adham Al-Saeed, Assistant Professor at Sultan Qaboos University, Sultanate of Oman. Joining His Highness for this impactful session, we are honored to welcome a distinguished panel of speakers whose expertise and leadership continue to shape the economic landscape of Oman. Please join me in welcoming His Highness Mundhir Al-Busaidi, Vice Chairman of the Vision 2040 Implementation Follow-up Unit, Sultanate of Oman. Mr. Hussein Al-Lawati, Chief Executive Officer of the Development Bank, Sultanate of Oman. Dr. Saeed Al-Mharmi, Board Member of the Central Bank of Oman. And last but not least, Mr. Tahir Al-Amri, Chairman of Dhafar Insurance and former CEO of the Central Bank of Oman. A round of applause for all of our panelists.
بسم الله الرحمن الرحيم والصلاة والسلام على أشرف المرسلين سيدنا محمد وعلى آله وصحبه أجمعين. If you'll excuse me, I'll be conducting the session in English for the benefit of our guests from out of Oman, as well as, just make it as seamless as possible and make the translators and interpreters' life a little bit easier as well. All right. In the beginning, while I'm preparing my notes, I would like to thank Development Bank for this kind invitation, and for the delegates coming from out of Oman as well. Welcome. It is exciting to see this international engagement at this level. And I would like to also welcome my fellow panelists. Needless to say, they don't need any introductions. I've worked with some of them for quite some time in the past. I've got some interesting stories, but I cannot share them with you today. All right, so what we hope to do in this special session today, inshaAllah ta'ala, is to kind of look closely at Oman's experience in the form of development, generally speaking, but more specifically in the development bank and finance part of the story. And I'm hoping that we would be able to expose our guests to some interesting case studies that might be very useful for comparisons as you look to engage in your meetings, inshallah, in the next 2 days, bi'idhnillah ta'ala. So without further ado, Your Excellency Sayyid Mundhir, how about we start with the broader picture of development, and more specifically about Oman's Vision 2040 and how well it sits with the Sustainable Development Goals, and perhaps, a broader sense of purpose behind this for Oman.
Thank you, Your Highness. It's a very good question, and I'm delighted to be here as well. When you talk about Vision 2040, if you're looking at like a kind of a sense, it serves like a compass basically to drive development in the country. And then there's a focus on key themes that are implemented or focused through priorities, which are the 12 priorities. And you can see some common themes like things focusing on improving the quality of life, for example, focusing and diversifying the economy, or focusing on governance, or focusing sustainability, whether that's financial or environment. And these are kind of the key themes that are present in the Vision 2040 document, and kind of implemented basically just to focus on how to achieve these final outcomes. And from our perspective, it's also, we look at things from in terms of a follow-up system. You will have these outcomes that you're trying to achieve, and at the end of the day, you want to establish a system that makes sure that these objectives are achieved at the end of the day. And for us, it's very important just to drive a follow-up system that makes sure that we get the impact that we're seeking at the end of the day. From our perspective, when you look at impact, there are certain characteristics that are kind of relevant when you talk about outcomes or impact. For example, one of the key outcomes or characteristics of outcomes is, for example, that the outcome has to be measurable, something that you can quantify. And in terms of that, you can sense this from the presence of indicators for all the priorities. There are indicators for innovation, there are indicators for sustainability, indicators for the economy as well. And this makes sure that we are trying to measure the progress as we go through implementation of the Vision 2040.
So, Your Excellency, perhaps a follow-up question would be, how do you draw upon these metrics to make meaningful development change? So I did mention the SDGs 2030 as perhaps one of those assistive measures, but where do we define development using those metrics?
When you talk about the Vision 2040, it was derived basically in alignment with SDG goals. So you can see the relevant items from the SDG goals mapped already into the priorities. For example, when you talk about sustainability, there is focus on establishing, focusing on, like, say, renewable energy, for example, focusing on key things like water, electricity, these things. These are all mapped in the priorities. I wouldn't say that they directly show up, but again, the mapping has been done when the vision document was developed at the start. Going back to what I was saying, when you talk about the outcomes they're trying to focus on, one of the key measures as well that we look, or characteristics of outcomes, is basically that there has to be relevant. When I say relevant, it means that something that is kind of constantly being updated every now and then to make sure that whatever is happening around you in the region or even international are also reflected in the vision. And this happens because we have a follow-up system that makes sure that every now and then these indicators are revised to make sure that we're measuring the right thing and we're keeping up with the things that are happening around us as well.
Excellent. Thanks for that, Your Excellency. Hussein, I'd like to come to you because His Excellency mentioned the word relevant, and I like that because Development Bank has gone through many iterations and changes over time, and it isn't just born, recently. So throughout this journey, and I know you came in more recently into the Development Bank story, what kind of relevance does Development Bank have in the overall Oman development story for the last 5 decades? Where does it position itself kind of as a sense of purpose and the ultimate, mission, if you may? So perhaps if you may reflect on that.
Thank you, Your Highness. I think it's very important to highlight that because I've seen a lot of changes are happening in the Development Bank, at least for the last 2-3 years. But the reality, Development Bank has been contributing to the country and to the economy since its inception. It's not something new is happening. Maybe we have been basically enriching the public with a lot of data and information lately, but the reality, the Development Bank, I know names maybe I'm not allowed to share here, but there's large companies of almost $300-400 million of the value would actually only started from Development Bank back in days in Oman. So that's kind of a reality. The challenge I think we live today, it's actually how to measure those impacts in reality. And I think that's where we actually kicked off from 2023 in the bank, that we don't want to measure ourselves what's our loan book, how our loan book, or how did we diversify each sector. We wanted to have an actual tool is available and what impact was done by us. We haven't reached to that conclusion yet. Yes, there are some of the tools, some of the measures we have done, and we should be able to come after testing them properly. We should be able to come into the public and share that. But I think it will It will really give us the figure once we have the proper integration between all the stakeholders, and thereafter we should be able to measure on how much contribution was done from the GDP point of view, on the revenue, employment, which is our key pillar. And lately we started also on the green finance. So we had a debate when we were discussing in our last board meeting. That is, yes, the bank have done more than $25 million of green finance loan, but how sure are we? Are these 100% green, or we are just part of that? So these kind of
I'll
things.
come back to that because I like those and I want to talk about those initiatives later to kind of compare what's happening elsewhere. And we've heard some of those agreements, the MOUs signed as well, touch upon these kind of enabling factors. Thanks for that, Hussein. I think that's an interesting point of view. Professor Saeed, you've worn many hats, including your academic hat, administrative, legislative, and today you sit on the board of the Central Bank of Oman as an active member, and you've been engaged with banking for a long time. Now, one of the key aspects, often we think financing, whether it's conventional, Islamic, or development purpose, has moved beyond what we believe is just traditional lending. And perhaps if I may pick some of the themes that Hussein had mentioned, whether specifically designed for sustainability. How do you see generally in Oman and broader sort of region those developments happening in the banking industry? Are we still lagging behind, or is the banking industry responding to the needs of the hour?
Thank you, Your Highness. First of all, since the audience are coming from different countries, it is good to give them a bit of background, quick background about the banking in Oman, in terms of the size, in terms of the loan portfolio, and then we'll be talking, I'll try to answer the question. In terms of the size of the banks, commercial banks, conventional and Islamic, it is 42 billion Omani riyals. That is about 108 billion US dollar. The ratio of loan to deposit represent almost 102%. And therefore, the banks, I would like to thank the banks overall in their role in the development of the country. However, what I'm going to add is to how to improve also their role in the development. When it comes to the portfolio of loan of these banks, it is about 32 billion Omani riyals. That is about 82, maybe 82, 83 billion US dollar. The portfolio is distributed as following: 38% for personal loan. And you could imagine that 38% mainly personal loans, so it will not be adding that much of...
And by that, Professor Saeed, you mean consumption loans, basically?
Yeah, consumption loans. It will not be adding a lot of value to the GDP, to the development of the country. One of the also customers to the banks is the government. The government representing only 2% of this portfolio. I'll be coming, and this is the good thing also, but the government is not taking loans, a lot of loans from the banks, from local banks, because the government is trying to balance the cash flow of the banking system. The government does not want to compete also with the private sector, and therefore there are different means and ways to get funds for the government. 8% for the manufacturing, 8% also for electricity, water, and gas, 7% for services, 7% also for the construction. So it gives an indication that this is the distribution of the loan. Can it be an improvement? Considering the ratio of loan to deposit, the maneuvering is very limited for the bank, for the Omani banks. And therefore, they have to increase in size. Some of them, they are saying, well, the solution in mergers and acquisitions. Mergers and acquisition will not be solving the issue, okay? It might be fire back also on the customers. They might be getting a higher interest rate.
But some would argue, Professor Said, that consolidation will strengthen the financial system, especially the banking, that it may meet some of those development needs and may expand beyond the need of a heavy consumption, sort of consumer-based. What's your take there, if I may kind of...
Well, I'm not in a favor of, personally, I am not in a favor of mergers and acquisitions a lot, because it will not, that the bank, the merged bank, will be bigger in size. Is that a good thing for the society overall? Maybe not. For depositors, in this case, there will be a monopolistic competition. Depositor will be having less interest rate for their deposits. Those who are seeking loan, because of number of banks is shrinking, they will be having a higher interest rate for their loan.
Professor Said, I'll come back to some of those issues because I think they're critical and allude to those connections between banking and development and productive sector. But perhaps also one of your colleagues as well, His Excellency Tahar, who's been the president of the Central Bank of Oman, would have a different view perhaps on the developments in the banking sector. But before you share those views, I would like to bring us back to the development agenda that Said Munder had mentioned, and some of the metrics that we have for Oman, especially under the new programs of transforming the capital markets and banking sector and financial institution, is financial inclusion, which I believe you've worked hard with the team in the Central Bank of Oman to improve. Where are we from this metric? And reflecting on some of the data, 38% of our portfolios, loan portfolios, are consumer-based. So can we draw some lessons there, something that we think is working in Oman that others may learn from or benchmark against?
Thank you, Your Highness. Very, very happy to be here, and thank you for Development Bank and the ADFIAP for the invitation. I think in my view, with regards to inclusion, there are two main aspects to inclusion. One is accessibility. Basically, anybody, anywhere can actually go or tap on their phone or on their computer, or actually go physically and be able to get a service. And the other one is eligibility. So with accessibility, Oman is fantastic. Anywhere in Oman, you can actually go or call or go online, and you can get a service, whatever that service is, including a loan from development.
Can I challenge that a little bit?
Yeah.
We have a dichotomous labor market in Oman with a lot of migrant population working in Oman, and sometimes the regulation might not be very easy for those people who come to work for a short period of time. So inclusion does not just mean citizens of a country, but everyone who's in here, investors and whatnot. Yeah. So while I might agree with you earlier, I can apply for a bank account and access those services. Are the procedures easy? Is it very accessible? The duration, which may hinder my progress towards that inclusion.
And that's exactly, Your Highness, what I'm getting to. There is accessibility. That means you can actually go and do something. Right. And there is eligibility. Now, eligibility is a little bit different, whereby that's something that we need to work on. So the example that you kindly gave is if somebody is, for example, on a work permit or something, they might reach a branch which is available, but they might not get the service because of eligibility. And that's something that is, I think, we need to concentrate on rather than the actual availability or accessibility of the. So exactly, the eligibility part, that there needs to be a lot of improvement. And that eligibility part is dynamic, because regulation is always dynamic. You have to have regulation, and then you always go at it, and you always try and change it. And you will always have, how can I say, shortcomings, and you will need to fix them. And even if you fix those shortcomings now, you need to go at them again. And that's fine, and that's normal, and that's very... And I would like to also just refer to something that is very topical. The world has been speaking about tariffs for the last, I don't know, what, 2 months now?
Yes.
Yeah? And that's just tariffs. And tariffs is tumbling the equities, the bonds, the, what do you call it, the borders.
Commodities and
it's
everything.
only one thing.
Yes.
Yeah? So we should not underestimate any aspect of anything that we need to tackle. And that's why you need to go and, actually, on the positive side, it proves that if you tap something, something will happen.
Yes.
And you need to tap it in a way that it is positive and it is huge.
The chain reactions, basically, that
Absolutely.
some of them. But interestingly, on the financial inclusion point, and I want to come back to the developments in Oman, and perhaps we shed some light on those developments and how they improve the eligibility as well. But Said Mudir, I'll come back to you now and delve a little bit deeper into sort of the monitoring that the Office for Vision 2040, Oman Vision 2040, and you've mentioned something about those metrics evolving over time. And evolution is part of development, you know, but ultimately, we as humans are the central sort of construct of any development story. So how is it we're able to connect those metrics to us, the individuals, and how we might be involved and carry on? In Oman, we have the special event, the annual event, Moving Forward Together, and that has become pivotal to this communication tool. Perhaps maybe help us learn a little bit more about the metrics and how we engage society with those metrics.
Sure. Probably, I think I'll give just a holistic overview of the whole system. I mean, I'll start with the first thing. When I mentioned relevant, these indicators are being updated every now and then. We just recently updated Vision KPIs. There was a focus in the previous Vision document on international KPIs, but we had challenges with international KPIs. Among them, for example, some of them just stopped, you know, being produced. Some of them, you know, the methodology keeps on changing every now and then. So there was a decision basically just to focus on few or main indicators that are international and more focus on just developing local indicators. These local indicators are a better measure of our progress and aligns with the objectives that are under each priority. This is the first part. The second decision we have made is like, you know, the vision is divided into like, let's say stages. And we decided to focus on key, let's say, indicators for each stage. For example, for the current 5-year plan, they were focused on key files, I would say, like, for example, investments, sustainability, let's say, digital transformation, just diversifying the economy, for example. And these were like, gave us like some sort of focus, at least for this current 5-year plan. And the third thing, we made sure that there's a way to align what each government entity is doing with the vision indicators. So now what happens is that each government entity has a KPI card. These KPI cards or indicators are basically making sure that alignment is there between whatever is the government is doing and the overall KPIs.
Said Mudir, is there a risk that we become too KPI'd and focused on these short-term to mid-term objectives and fail to see the longer-term objective? Development is a long-term process.
When you talk about indicators, this is always present. Like you focus on the indicator, and you know, in a way, sometimes you might forget the outcome. But it was very important at the beginning to instill this culture of indicators. And now you can see this in government. There are indicators of everything. Everyone is measuring someone else. And therefore, this culture is already being engraved. And now the next stage is just to make sure that the focus on the outcomes. And this is still maintained if you look at the vision indicators. For example, we're still focusing on the key ones, like maintaining a certain growth rate, for example, welfare, social nets, these kind of things. And there's a way for the public also to voice their opinion about this progress. And you mentioned Moving Forward, for example. Ma'anna Taqaddam is one of these platforms. And now we're trying to instill tools that are basically kind of helps in that direction. For example, we recently launched Manassat Tajawub, which is the service follow-up platform, just to make sure that if the community has feedback on the quality of services being provided, now they have a channel basically to voice these concerns. And this helps in the overall development of how we do things overall.
Yeah, thank you very much, Your Excellency, for that. I think, Hussein, I'd like to come back to those initiatives that you've mentioned. I want to delve deeper into the role of Development Bank in Oman and the support for what the theme of the meeting is, basically the economic gardening. Those budding businesses, greenfield businesses. Could you tell us a little bit more about some of the programs, the sustainable programs, or any others that you're working on right now that perhaps our audience would be more, interested in learning more about?
Yeah. So I just want to come back to one thing, Your Highness, about His Excellency Tahir was highlighting about the financial inclusion. I just wanted to emphasize in the role of development bank in the financial inclusion. I've seen some data where shows that a lot of farmers and fishermen were actually not banking. They were actually dealing, their business model is to farm, fish, get into the cash, sell, use it at home. There was no any financial. I think the business model and the accessibility of development bank for lending to those sectors have, I'm using the word imposed them to come through the financial inclusion system. So as a normal bank, if they want to benefit from the facilities given by the government under the farming and the fishing activities, they need to come through the proper channel. There's a basic credit assessment needs to be done. I think they then moved, they knew that the importance of getting into the financial inclusion.
So if I may break that down, I need to have a bank account somewhere to be able to come to development bank, for example. So I am banked. Is that kind of the step you're talking about? Or is it simply...
I would say no, maybe it's not mandated to have a bank account before coming to development bank, but definitely if you want to avail a facility from development bank, want to benefit from the facilities where the government is offering for as incentives for getting into the benefit of the loans given by the government, you have to have a banking account. So it's a two ways. It's a part of the mandate to have the transaction. We do not deal with cash. I think development bank, long back before maybe any other bank, we stopped dealing with cash in our counters. We are just dealing with either remittances or POS. We don't deal with cash. So that itself, for having all these access channels, you need to have a bank account. So that's, I just want to emphasize that the development bank has a very important role for financial inclusion. Now, coming about the programs we were highlighting, this economic gardening is for us a pilot we started the program. I want to just share about the link of us with the One Vision 2040 to align to the initiative. I was told when I sat with one of the consultants telling me that is, tell me what you want, how do you want the bank to be so we can help you to build your strategy. I said, you just look at the Oman Vision 2040 strategy, make me as an enabler. That was the easiest and the shortest. And that's how we made our strategy document, where we are actually just an enabler for Oman Vision 2040. We mandated our business model only to be within the Oman Vision. So based on that, one of the key, basically, component of Oman Vision 20 is the decentralization. We wanted to have, we didn't want the focus to be into the one area. We wanted all the other regions within the country to support in the JDB. Okay, we don't want everyone, the people, to leave from their cities and to come to the Muscat to Port. So that was the diversification. And to make that happen, it cannot be just make it by lending. We wanted to make sure that we enhance the maturity level of some of the regions in terms of business environment, accessibility, understanding the model, and to actually share with them the opportunities are available. So our kickoff was with Musandam as a region, right? And we were blessed with the partners like the OCCI of Musandam. They supported us, and His Excellency, the Governor of Musandam, also helped us for making this project start there. We kicked it off in a very shy level as a pilot, making sure that the companies within Musandam, especially those stage 2 companies who have employees between 10 to 150 with annual revenue of above $1 million, have the right accessibility to the businesses, have the right networking within the region and within the country, to have the right financial infrastructure. And our role will be, of course, to support, to create opportunities, guidance, funding, which is our bread and butter. And that will actually reflect better on us, Your Highness, so that our credit risk will be mitigated, will come down when you have the companies who are matured enough, they understand their business model, they have the accessibilities, they have the network. So that is one of the key initiatives we launched. Green finance is the second, I would say, that is, we are in the process of being accredited now with GCF, Green Climate Fund, will be probably the first in Oman and maybe the first in the GCC.
Is it specific to development banks in the region across the world, or any type of financial institution?
No, see, the GCF, it does not, make it only for development banks. But of course, when you ask them offline the preference, they always develop the banks who are owned by the government. Okay. They're giving them the good comfort, accountability, reliability, risk profile, whatever you call it. So we started our process of being accredited with Green Climate Fund. That will support us to be enabler to provide funding for adaptation and mitigation projects, which
Would
are
there be
being...
co-funding with the Green Fund as well? For
It's all depend. They have their own criteria. Whenever there is a project ready, we submit the project on behalf of the owners. Ideally, 90% of the today's projects are government projects, but the door would be open also for the private sectors who are into it. They have their criteria. They will consider which projects are as a grant, which project is coming as a co-finance, which project will be as a 100% finance with a very long tenure. There is a different criteria. So,
right.
but our aim was to have to be accredited with them. That will actually open the door of having access to this finance. And usually the speciality of this finance, beside the cost of fund, the tenor of this loan are very much aligned to these kind of sustainable projects. Because usually the sustainable projects are not the traditional tenors of 8 to 10 years where you can pay off your debt. It usually requires a longer tenor, and those loans are very much aligned to such kind of things.
And I should mention here that Oman, also the Ministry of Finance, has launched its sustainable financing framework for infrastructure projects, which may very well align with some of these international accreditations and makes funding. And I'm sure His Excellency is happy with those alignments with 2040. Professor Saeed, I want to come back to you regarding the role of the traditional banking system, Islamic and conventional banking, and some of the other tools available. And how well, in your opinion, do they link with our development metrics and enabling, especially what we've been talking about, sort of the grassroots small businesses and startups? Do you find us evolving fast enough to connect well? Are there gaps that you see that could be very well, the role that the Development Bank in Oman or other entities can play to complement that role? Or are we expecting too much of conventional banks and Islamic banks? If I may stick to the financing through the banking system alone.
Yeah. First of all, I would like to say that in Oman we are having the Development Bank and also the SME Development Authority, and they are doing an excellent job in terms of financing different projects, for the development, purposes. When it comes to the commercial and Islamic banks, unfortunately, for example, I did many research on Islamic banks, traditional banks. I compared also banks within GCC countries. First of all, in terms of efficiency and productivity, Omani banks are on average. So overall, they are doing good. When it comes to utilizing the funds for the development, this is not the case. And maybe it is also the same for most banks, commercial banks and Islamic banks in different countries. For example, Islamic banks, mainly they are involved in murabaha and ijara, which is short-term financing. And it is not related mainly to the development. And they are avoiding, for example, istisna, musharaka.
Well, those are available to them.
Yeah, and this is the supposed, actually, we were expecting, for example, Islamic banks to involve more in musharaka and istithna and so on. Yet, most of their financing in murabaha and ijara, unfortunately.
If I may just add, actually, diminishing musharaka is a critical tool being used for mortgage-style financing as well. As you well know, we've both been in Islamic banking supervisory boards, so there is some of that. But the key question, are there unreasonable expectations on the banking, for example, business models today in our part of the world or in a broader developing world where banks have a traditional role to play, working capital, that sort of thing? Are they better aligned? Or do we need more reform?
Well, the challenge in here, banks also, on the other hand, say, please listen to us. We are having challenges. okay? All banks, including the development banks, they are also having challenges. I'm talking about in here, of course, developed banks usually government banks, okay? So it is the funds provided by the government. But when it comes to depository institutions, commercial banks, and Islamic banks, they're saying that these funds, about 68% at least of the funds available within banks are not the shareholders' funds. These are the depositors' money. And these depositors, some of them also require a fixed return. And therefore, they are saying, we have to be a good custodian. We should not be involved in a kind of a risky projects because the higher non-performing loans will be affecting overall on the banks. That's why they are saying we are trying to avoid any kind of risky projects. Therefore, we are not involved in long-term project. We are preferring to do a short-term. That's why their involvement in the development overall, whether they are conventional or Islamic, is very limited. We are not saying that they are not at all. We admire their whatever they are doing, but we would like to see more and more involvement in different kind of projects. Especially, as Sayyid Munder saying, Oman Vision 2040 is very ambitious with big projects. And these big projects need financing. Who would be financing these projects? Even if they form a consortium, there will not be enough funds. And therefore, they have to increase in their size. And of course, they can increase through either equity, by increasing number of shares, or by issuing different kind of bonds and sukuk, okay? And leverage whatever raise funds to provide, financing to these projects.
And I think there's always going to be limitations on the size of the market and those opportunities as well. We need to be mindful of those. And something perhaps I'll leave for a later point is I would think that the development bank in Oman fills some of those key gaps that the conventional Islamic banks or other modes. Your Excellency, I would like to come to you on the reform side of the story and your tenure in the Central Bank of Oman and the collaboration with other entities such as the Financial Service Authority today in developing various technologies, various modes of financing and funding that perhaps are nascent today. They're still not well developed. But could you kindly explore with us some of those developments that Oman has seen recently that may very well work towards some of the objectives that we want for our vision, for inclusion, for diversifying funding, for SMEs and startups and whatnot?
Yes, thank you, Your Highness. Actually, it's, there was a conviction that regulation, again, like I mentioned, needs to be very, very dynamic because there are new ideas every day. People want to do things differently, even with the conventional ideas, and therefore, you have to be open-minded and you have to. Now, how quickly you can change something is always debatable, and how easy is always debatable. But you try and find ways and means to, to adopt and to encourage those value-adding initiatives, because you have the spectrum of ideas is huge. Some are not so much, effective, but the people who are behind them are very excited about them, but they are not necessarily adding value, or they might face challenges. So you need to manage that. And regulation is a balancing act. Regulation is basically, will always try to get the balance to make sure there is protection, there is management, and there is control. But with this world development of technologies, ideas, around the world, every day we hear something is new. Every day we hear, the tech companies are at the top of every single market, and the market capitalization of these companies is huge. You have to find a way, and you have to have a strategy how you deal with these things. So basically, at that time, the initiative was, how do we adapt or adopt those technologies, those people with ideas, those people who are really...
So, Your Excellency, how did we adapt? Tell us more about that.
Yeah, so collaboration, you need to talk to the right people. You mentioned, for example, the Financial Services Authority and other entities, including, for example, the vision, including people like the Development Bank, on how do you deal with... So somebody will have something that has to do with the conventional banking, some will have with the Islamic banking, some with the Development Bank. So every single one probably, if I don't exaggerate, will have a specific, unique way of how you need to deal with them. And therefore that collaboration, engaging the right entities from inside and outside, trying to figure out how you actually deal, how do you make sure that the environment that they are working in is safe, encouraging, and is protective or at least fair to everything. Because right at the end of all of this, there is a customer, there is an investor, there is a shareholder, there is a, there is stability. And you need to make sure that all of that is intact. Otherwise, you lose trust. Sure. Again. And that is the important. And like I said, you come up with something today, and you will look at it tomorrow and say, if I have the chance, I'll change this. And that's how it should be. It's dynamic. It's not necessarily bad. That's just
it's an ongoing, evolving. Before I open the floor for questions, I'd just like to pick your minds on non-conventional ways of funding development. In Oman, we have a special, unique sort of collaborative modes, what we call in Arabic jam'iyat, and effectively circles, communal circles, which have helped people raise zero. It's a form of crowdfunding, basically, very similar to the takafut or takaful concept as well. And those have been traditionally available. How are we harnessing that in your personal opinions? And we'll perhaps start with Your Excellency and come towards Sayyid. In a few words before we open the floor for questions, how are we harnessing these non-conventional methods that exist in our communities that enable development to reach those regions that we are trying to, without overcomplicating it by regulation and whatnot?
Yes. So there is, for example, the big example is crowdfunding, which is also available in other parts of the world. It's available in Oman. The Financial Service Authority is also working on that, and there are financial technology companies that are doing it. It will grow in the future, I am sure, and it will have its own challenges, and it will be fixed, and so on. And then you have like similar to Jam'iyat, what they call also outside, I think they call them the Rosca. So basically that's also, I know for a fact that there are companies that want to provide that are being tested in sandboxes and being tried and checked to see how they are going to work, how you are going to, for example, with the Jam'iyat or the collectives, the challenge is how do you protect the rights of people who are participating, and that has always been very important. So with this platform or platforms that will come, you will have to come up with ideas or ways and means to actually protect that. But the interesting thing about all of this is that every day we leave this stage today, and there will be something new coming up tomorrow that you need to deal with. And the only thing is you make sure that you continue to look at that and develop it.
Thank you, Your Excellency. Professor Saeed, what are your thoughts on non-conventional funding that works well to enable communities like microfinance and some of these easier? Because you did mention, especially with the Islamic finance, especially in agriculture, the difficulty of ensuring a harvest or fisheries to ensure certain quantities. And there's always going to be a gap somewhere. So any take on that from your perspective?
Yeah, apart from the conventional and Islamic, we should also have non-banking financial institutions. If we consider development bank is a specialized kind of bank, then in here in Oman we are having the SME authority development kind of funding. We would like to see more and more of these non-banking financial institutions. We would like also to see more of financing companies. So we would like to see different options not limited to the development bank. Of course, development bank is doing an excellent job in terms of they are having corporate financing, they are having the SMEs financing, they are having also the seasonal, or what they call it, Mosami, and so on. So we want to see more and more institutions. You are mentioning the collectives or jam'iyat. They are doing also a good job. Specifically, it is based on trust. Usually, people will join based on trust, and they can collect. It could be the seed for a start of any kind of a business. So overall, we'd like to see more and more different kind of institutions.
Thank you, Professor. Hussein, how about your perspective on non-conventional modes of, again, the ultimate outcome that we're looking for is development for communities, for businesses and individuals?
Yeah, I think from our side, I've not had a big thought about it, but I would definitely think of how can development bank come closer to the community to minimize the need of this non-banking instruments which are available. Those are, if there is a proper legal framework, regulatory framework for them, then definitely it might be one of the additional instruments that are available in the domain for people to start borrowing, especially with people who don't want to get exposed to interest or Sharia compliant, whatever it is. But I think in my personal humble point of view, that development bank should be trying to minimize the need of that, go closer to the communities.
Your chairman's here, so good messages can go to him.
Okay. So get closer to community. I think the speciality, maybe there is a lot of complaints maybe in development bank of being relationship-based driven, not product-based driven. So that is one of the requirements. So the closer you are to the people, especially those sectors, the more you understand their needs and the more assessment you will be able to do. And then you bring it to a platform, because that platform will mainly have a numerical or quantitative kind of a measurements. So with the current maturity of how we are operating, especially those very community-based sectors, I think development bank doing what is supposed to be done, and definitely we aim to do much more to come closer to those communities to minimize the need of doing this kind of funding.
Right. Thank
Sorry, that what came in my mind. I could not think of make that expand until the proper regulations are available.
Absolutely. And I go back to the case study of the COVID impact on some of the businesses and the micro emergency loans that were initiated during the response to that. And that could be one example, if that could be sort of institutionalized in such a way to meet those emergency needs so people don't fall between the cracks, so to speak. Said Mundhir, this is all very technical here from our technical expertise, but I understand also that the Vision Office oversees the national acceleration programs, one of which is the financial development or istidama, and obviously His Excellency is involved with that as well. But from your perspective, what is Oman trying to link through those kind of programs, specifically on funding and financing and capacity building and enabling development and meeting the 2040 goals in very general terms, please?
Sure. Of course, I'll not comment on the non-conventional laws. I'll leave the experts to talk about that. From our perspective, as I said before, we always look at things, you're trying to establish a system that works. And therefore, like, as you mentioned, you kindly mentioned that one of the key things when focusing on key files, that if you talk about non-conventional loans, for example, things related to financial sustainability, it's a cross-cutting platform. There are many entities involved. There's Ministry of Finance, there's CBO, there is Development Bank, there is a Financial Services Authority, and therefore it was a very valid point to establish a program that is kind of actually an owner of this whole, let's say, domain. And from our perspective, our role is basically to make sure that the whole system is actually being built. And we can see some fruit happening over the past couple of years. For example, there is crowdfunding starting already. Of course, it can be at a much bigger scale, but at least it's developing. There are talks about also sandboxing, as His Excellency mentioned. There's an SME market that's been established already in the Borsat Muscat.
This is the emerging company markets in the Muscat Stock Exchange.
Exactly. So we can see the elements are being developed. There are also some issues in terms of legal issues, like making sure that providing things like unconventional loans or other kind of creative solutions need some legal kind of enablement, and therefore this is already being done. So from our perspective, we're just looking at the whole picture. We're trying to make sure that the whole system is just working together. And at the end, we have to just to make sure that, each thing is not done as like a KPI, but at the end, looking at the overall aim, which is, let's say, prosperity, for example, growth rate, expansion of SMEs, and, developing the economy overall.
Excellent. Thanks for that, Your Excellency. Now I'll open the floor to a couple of questions, please. Dr. Yusuf, we'll have a session بعدين with you. Now, you're welcome to ask your question. Could we have a mic, please? لو سمحتوا ناقل صوت. Could you please introduce yourself and your association and make your question brief? Any commentary could be discussed with our panelists after.
My name is Yusuf Hamad al-Blushi, and I will build on what you just said, Your Highness. Development is a long process, and also His Excellency Munzer said that Oman Vision 2040 call for an economic diversification, job creation and production, manufacturing, logistics. And despite the good indicator mentioned by Prof. Saeed about our financial sector, that we are having a really strong financial sector, if you check any report in doing business in Oman, access to capital remain number one. So this is honestly a call for our guests from different countries that there is a huge business opportunity in Oman. They are most welcome to come to help us to fill the gap on the huge investment needed by Vision 2040 to fulfill the really inspiring vision. This is number one. Number two, also, can we see...
Dr. Yusuf, I want your question, please.
Yeah. Can we see a real reform in our financial sector? It's needed. We cannot achieve the vision without this reform. Prof. Saeed, floor is yours.
Thank you very much. السؤال هنا عند باشمهندس. هنا في الأمام، في الطاولة الأمامية. تفضل باشمهندس. No, we'll take the two questions and then we'll come back for more.
Thank you very much, Your Highness. My question direct to Mr.
Introductions,
Hussein.
please. You're a well-known man,
Yes,
but introductions, please.
Mohammed Ghassani, State Council member. A question to Mr. Hussein. As the session is talking about the empowering the community, and I can see the Shariat compliant financing has its own audience, but till now we have not seen that interest in the development bank to take that route. Any justifications for not taking that? Although it's an opportunity for the development bank itself. That question for you. And the other question is for Professor Said and Dr. Taha. The private sector, some segment of the private sector, suffering from the high cost of the finance. Although we are hearing that the collaterals will be reduced, therefore the risk will be less and the cost might come down. We have not seen that in real life yet. Still, in some sectors of the business, the cost of finance is higher than the actual yield of these sectors. Yeah. So any justification, please. Thank you very much.
Thank you. So we'll answer those two questions first, and then we'll come back to. So the first question from Dr. Yusuf was for you, Professor Saeed. What kind of reforms do we have enough? Can we reform the financial sector?
Can we reform? I would say there are two sides. First of all, it is coming from the central bank. Okay, central banks. Even though I'm referring to the Central Bank of Oman, but it is always applied to other countries. Central banks should lower, the requirement. In here, unfortunately, I don't know whether His Excellency agrees with me, because he was the CEO of the Central Bank of Oman. We tend to be very conservative, and therefore we are requiring a higher requirement, whatever requirement is. If, for example, capital adequacy rate requirement in the world 8%, we are requiring 12%. So we are kind of very strict in applying rules, and that is affecting the banking industry. That's why we are seeing a smaller size of the banking industry. And therefore, recently, even when His Excellency was in charge, they tried to lower many of the requirements. Recently also, the capital adequacy rate reduced from 12 to 10%. Hopefully, there would be more funds available. This is the side of the Central Bank of Oman. The side from the banks, also they should understand their customers and what are the needs of the customers. For example, the government is one of the customers. What does the government need? Okay? The government need, of course, for infrastructure, especially when they are going for PPP, public-private partnership. So they need fundings, and usually hundreds of millions, okay, at a reasonable rate. How about the SMEs? What their requirement? They will be having a long wish, a long wish list. And by the way, this is applied to the development bank. If you ask the SMEs, they will be telling you, we need an ease of collateral, speedy, approval. We need lower interest rate. We need lengthy kind of loan, and so on. So the list is very, very long. What the businesses also needs, it depends on the sector, because each sector is having different requirements. For example, in here in Oman, food security is an important issue, and therefore they should be having their different kind of loans. The good thing in development bank, for example, they have the seasonal loan or Mawsami loan. So each sector will need different kind of requirement, and therefore it is not only from the central bank, it's not from the regulatory, but also from the banks, and the change is there. So should I answer the second question?
I think you've answered both the idea of cost of finance and collateral. It's sort of there, but if you would like to address more of that issue.
Cost of funding, actually, the banks usually, I mean, there are experts in here, usually when they price a rate, it will be the cost of funding, that's the cost of funding, plus their risk. And they are saying, of course, we are having different risks. And then the margin, okay? I wrote a paper, interest rate in Oman, is it fair? And it was published paper. And, I gave a recommendation at that time, it was in 2015, that the Central Bank of Oman should lower the interest rate because we were higher than our, neighboring countries.
Are we talking about the overnight rate? Are we talking about the official rate or the caps on those?
This is the average.
Average.
Yeah, the average. Yeah.
Right. Thank you for that, Professor Said. There's a point or a question for you, Hussein, on the development bank as well, although a very cheeky one because he was there on the board sometime as well, right?
Your Highness, can I just add
Yes, sure.
on Professor Said very quickly? I like him mentioning risk because it's always the point of contention. How do you price risk? How do you price risk? And we will move from, for an example, we will move from banking to insurance. At least banks give you the money and lend you the money to go and do. What does insurance give you? It's just giving you...
One would think peace of mind, Your Excellency. I don't know. Do you agree? Peace of mind?
Yeah, probably, but it's just managing risk. So you pay them money to manage risk. And it has a price on it. And I think that's the point of contention. And we will always have a spectrum whether this is risky and therefore it has to be priced this way, or this is not risky and it has... And you will have different perspectives from the borrower to the lender. So I think that's where the cost is. And very quickly is, for example, if we take a different thing, cost other than financing cost, for example now, and the markets are volatile, if you have a component, if you're making something and you have a component that has now 145% tariff on it, your cost is going to shoot up the roof.
Assuming you're in the US market though, but if you're in the Omani market, I am not subject to that. I'm subject to the ripple effects,
Well, yeah.
as it were. So, as an economist, I'll push back and say, until the interest rates in the US pick up because of inflation that comes through the policy, that is when the cost of borrowing, pointed out by the honorable engineer, will go up in Oman.
Yeah.
But naturally, you know, that spread. So again, I'm a different
Yeah,
perspective.
but my point is just an example of that risk that you need to manage somehow. And most of the entities who borrow never have a buffer for market fluctuations on cost of funding. And that's an issue.
Absolutely.
Yeah.
Which point taken? Hussein?
I need His Excellency to repeat his question because it was not
Okay.
very clear to me what was exactly the question.
مكرم
بس
تكرما
السؤال ما فهمت بالضبط ايش
أيوة.
كان.
It's just providing Sharia compliant financing.
Sorry, say again.
Sharia compliant.
Sharia compliant.
Okay, sorry. Okay, I think Sharia compliant. It's historically the development bank was historically it's a conventional banking. It's not that we did not look at it. There is a demand, there is understanding, but I'm sure Your Excellency you understand that it's an infrastructure. It's require a major that is where the regulators, if you may allow me, the regulators are reluctant to have a window option. They would prefer that the banks have either a fully Sharia compliant bank or a conventional than to have the conventional. And even in different Sharia compliant banks worldwide, they also consider there is some debatable approaches there if a window exists within a conventional. So as a development bank, the initiative was initiated. Feasibility study is into preparation. The concept paper was passed to consider which model we are yet to decide. Should we do the white labeling of the existing Islamic banks, then to provide that service to our beneficiaries? Should we have a window which might not be recommended? Should we convert 100% to Sharia compliant? That will have a time constraint.
Could you outsource it altogether? Find a partner who would do the work for you?
So it's from the feasibility, of course, definitely. We don't have the in-house capabilities to do the assessment of the proper Sharia compliant. Can the development bank do that or not? And definitely we outsource that. But we will definitely look at what option is more viable for us and will serve the purpose. So maybe white labeling, utilizing the services of the existing Islamic banks, utilizing their services and correlation and collaboration with them to provide those kind of Sharia compliant loans to our beneficiaries. That would be an option. Or maybe if we want to do something in-house. I think we considered it, we did our assessment, and we are yet to conclude which route we need to take.
Thank you for that. Do we have any more questions? We have one on the left here. لو سمحتوا ناقل الصوت شباب. So we'll take one more, please, and I think our time is pretty much done. There we go.
Excuse me.
Is that 5 minutes? Well, khalas, we're done. 5 minutes? Thank you very much. All right, so this question and then one more question, and then I believe our panelists are available immediately after the session.
My question is directed at His Highness Al-Busaidi regarding the implementation of 2040. Now, from the perspective of inclusion, financial inclusion, which the moderator refers to, the biggest impact to the grassroots is from the supply management. So my question is there any specific strategy by the coordinating committee of 2040 implementation to ensure that the community supply chain is boosted so that it can maximize the benefits of the 2040 vision? I'm asking this question from the experience of Malaysia, which just completed its 2020 with mixed results on that particular aspect. Thank you.
Thank you. I would have loved to know your name as well. Thank you.
Muhammad Hussein from Corporate Guarantee Corporation, Malaysia.
Welcome to Muscat. Welcome. We have one more question right at the front here, and then we'll take the answers.
Assalamu alaikum. I'm
Alaikum salam.
Zamri. I'm also from CGC Malaysia. I actually have a question and one observation and one comment.
Can we do the question?
Yeah, I'll try
and
to
then,
do it quickly.
Please.
You want the question first?
Just give me the question.
Okay.
I'm happy with the discount.
Yeah. Professor Said spoke about the Islamic finance, and I think to move the needle, what we must do is to shift from Sharia compliant to Sharia based products. You are talking about not just we're talking about risk sharing and partnership, not just risk transfer. Talking about the real economic activity, not just paper transaction, and also talking about sustainable and ethical values which is in line with the Makasi al-Sharia. So my question to you, Professor, is the challenges that comes with it. I think this is something that we need to think about. Yeah, that's my question. Your Highness, if you can just give me 30 seconds to give my observation.
Sure.
This is a DFI meeting, and I'm glad that we are talking about not just about what we do in DFIs, but also what the Islamic banks do, what the conventional banks do. So I think, with regard to this, there is a need for what I call as a whole of nation approach, how we can actually create partnership between the conventional banks, the Islamic banks, the development banks, as well as the NBFIs that I think Professor Said mentioned just now. And with regard to comment, Mr. Tahir spoke about two things on financial inclusion, that is access and eligibility. And I think I'd like to add just one more, making those not eligible now to be eligible in the future. And we can do this by capacity building, which we have done in Malaysia, in CGS Malaysia, where we call it Beyond Guarantee. We teach them Finance 101, Digital Banking 101. Thank you very much, Your Highness.
Thank you. Thank you very much. On that last comment, if you allow me, Your Excellency, just to comment, Oman is undergoing a similar program for younger people at school and at high school, higher education, and the community at large, as part of the overall Istidama program and financial development and reform as well. So, Sayyid Mundhir, there's talk about connecting communities through value chains within the broader vision, 2040. Professor Saeed, the Sharia compliance to Sharia-based products that meet Sharia-based products, so it's not just the compliance aspect, but products that make a difference as well. And Your Excellency Tahir, making eligibility happen, and how might we go about it? So, Sayyid Mundhir, you want to start? I believe it's closer to Oman's ICV kind of, so maybe we can talk about the ICV sort of initiative.
Sure. In terms of the ICVs, ICV is one of the main kind of, let's say, tools.
In-country value.
In-country value. In-country value is basically one of the main tools to make sure that, there's more opportunities basically for local businesses as well. And currently what we have is there are certain targets that are properly cascaded to each entities. And we have basically conducted, I think, a couple of months ago, there's a lab basically focusing on ICV to make sure that, the enablers that are required for the ICV are actually in place. And that's under basically the tender board. They have a new directorate which is basically focusing on ICV. So it's already in place, but it just takes time to mature and develops into more like a flourished model, I would say.
And if I may just follow up from that, does this really get to the smaller communities that are trying to build, to be part of the value chain, economic benefits in the regions that was mentioned much earlier on in our session?
Currently, it's probably more focused on SMEs as well, but I think at a later stage, it's destined to develop further. So it now cascades also to regional entities and other communities as well.
Absolutely. So, Professor Saeed, the challenges of pivoting more towards the Islamic Sharia-based products as a way to connect to our development goals, what are the challenges you foresee?
Yeah, I was among those who were very happy when we heard that we will be having Islamic banks in Oman. Because at that time we thought that Islamic banks are, going to have, a kind of a project based rather than, giving some kind of just financing for consumables. We did a research 4 years ago, Dr. Jabir Ismail and myself, about the Omani Islamic banks. Banks and windows, in terms of two things, in terms of their investment, where do they invest, and also in terms of their financing. And we realized, and the title of the paper is the role, the development role of Omani Islamic banks. And we came to a conclusion that their role is very limited. We are talking about more than 75% of their transaction is in al-murabaha and ijara. And istisna' and musharaka is very limited. We want them to go even further, as the question is saying, by involving in real projects, producing real products and so on. So we want them to move from murabaha and ijara To go even further, we would like to see Islamic banks having some kind of different type of projects within the country, producing different kind of products. That's what we would like to see.
I agree. Now, just to kind of complement the point made, now the Islamic finance in Oman is very nascent. It's about 10 years to 12 years, since 2013, if I'm not mistaken. So, and it's already becoming an emerging market for Oman. About 15 to 16% of our total portfolio of assets are held by Islamic banks as well. So there is progress being made. But arguably, since 2000, your paper, probably newer developments have come through. But on the final note, as we hear the final bell, eligibility, the path to eligibility, if I may.
I couldn't agree more. And Your Highness, you actually mentioned the efforts that are there, making sure that students, children, everybody is what we call financial literacy, so financially literate, understanding, aware to a reasonable extent of how to manage their finances, how to save, how to take insurance, how to basically manage their money. And on that path, there is a lot of effort in the country to make sure we have curriculums that include business, basics, and so on and so forth. In the universities, there are initiatives as well to make sure that you have something that at least you go out with something basic and become eligible in the future. Thank you.
Thank you for that. I'm sorry we don't have more time for more questions, but I would like you to join me in thanking our esteemed panelists for a very in-deep dive into what we believe is funding development and making all of those connections in the Omani experience. Thank you very much. Thank you.
I will request the panelists and the speakers to kindly remain on stage. We shall be inviting up on stage His Excellency Mahmoud bin Abdullah Al-Awaini, Secretary General of the Ministry of Finance, together with His Excellency Dr. Kautak, Chair of the ADFIAP, to kindly join us on stage as we recognize our panelists for the amazing, thought-provoking panel session. All right, we will be starting off. I will call your name and you will stand in between the two chairmen. So starting off with His Highness Sayyid Dr. Adham Al Saeed, if you can please join us in the middle of the stage. A round of applause, ladies and gentlemen. And now His Highness Sayyid Dr. Mundar Al Busaidi, please join us to the middle of the stage. A round of applause, please. Followed by Mr. Hussein Al-Lawati. A round of applause, ladies and gentlemen. Followed by Dr. Saeed Al-Maharmi. A round of applause. And last but not least, Mr. Tahir Al-Amri, to the middle of the stage. Can we have the other gentleman? Yeah. And finally, a group photo with all of the panelists, the moderator, and the two chairmen. Can you please smile for the camera? On behalf of the organizers and all the attendees, we extend our sincere gratitude to our moderator and distinguished speakers. Thank you for the insightful contributions and dedication to advancing community economic development and empowerment and sustainability in Oman. Thank you all. All right, we now continue with our agenda for the day with our leadership and development sessions designed to spotlight impactful strategies and success stories across the region, titled Local Champions, the role of Stage 2 businesses. The session will explore how mid-growth enterprises, often referred to as Stage 2 business, play a critical role in driving innovation, job creation, and economic resilience. Please join me in welcoming on stage our distinguished panel. Starting off with the moderator, I would like to just double check if the Honorable Engineer Mohammed Abu Bakr Al-Ghassani is still with us, member of the State Council, Sultanate of Oman. A round of applause, ladies and gentlemen. Followed by our speakers, Dr. Sayed Ali Haydari, Deputy Managing Director of Financial International Affairs, Bank of Industry and Mine, Iran. Please join us on stage. Mr. J. Khairil Jeremy Abdullah, CEO, Bank Simpanan Nasional, Malaysia. And last but not least, Mr. Ronaldo Tepora, Senior Vice President, Development Bank of the Philippines. A round of applause as all of our moderators and speakers join us on stage for the next session. Just a disclaimer, we will have a bell and I will have to sign you off just for the sake of time so we can have lunch early. Thank you very much.
Yes. I would like first to thank the Development Bank and the ADFIAP Secretariat General for their kind invitations for me to participate in this prestigious gathering. Introduction already done. We'll proceed immediately, right, to the sessions. The structure of the session will be as follows. I'll briefly introduce the topic of this session, as it mentioned there, the role of Stage 2 businesses. And later we will request our distinguished panelists to deliver their presentations. Each one of you will have a window of 8 minutes to deliver your papers. If time permits, we will open the floor for our beautiful audience to interact with our panelists, and then the conclusion remarks. So without any further ado, we will start. Economical gardening. It's a phrase, it's a strategy, it's a direction that many, started, economy is now proceeding in that direction. The purpose of it is to focus on local businesses, try to the purpose of this is to emphasize empowering the mid-scale businesses in order to provide the support and resources to enable them to flourish, to innovate in their economies. The purpose of that, especially in countries like us, that segment is between large enterprises and the SMEs. They are overlooked, actually, although their vital role, but they are overlooked. So we will shed lights on this segment. We will ask our panelists to shed more light and to share with us their experience and how we can sustain the growth of this segment, and to provide the right support for them, and to share with us examples from their own countries. So without any further delay, please, Dr. Haydari, would you start your presentation? Yeah. Yeah, please, if you are. Do you have a presentation there? Yeah, please. Window is 8 minutes, yeah?
So maybe Okay. Good morning, ladies and gentlemen. Hope have a nice panel and also good and effective meetings over this two-day conference in beautiful Muscat. When I was getting prepared for this panel over the last 6 months, I thought that from what aspect I provide my presentation over this panel, for this panel. I was studying different subjects, different materials, researchers. Finally, I found a good research, at least in my mind, which can be related to the panel, to the title of this panel. I would like to share some of most important of this research. I work on it and add something to it. So would like to share with you, Excellencies. And finally, find where is the position of the DFIs among other parties for supporting of SH2 business companies. First, let me briefly explain some characteristics of the SH2 businesses. As you all excellencies knows, usually these type of companies have around 10 to 100 employees. Their revenue vary from $1 million to $50 million. As the Mr. Moderate said, they are no longer a startup, no facing scaling challenges. It means that they pass the startup phase and at the same time they are not considered as the large scale companies. We call them manufacturing. They are at the middle of the road. Maybe they want to be as a manufacturing company or no, let's say at the same level. What are important for them is job creation, innovation, and economic resilience. In other words, they usually help to the local job creation, to the local innovation, and local economic resilience. That we'll explain more at the continuation of the presentation. And finally, they need tailored support. It means that because they are not so small, micro size, and not so large in so large size, so they need their own support in every area. So I think we can call SH2 business as the SME companies. So when we are talking about the business to companies, it means that we are talking about the SMEs who recently start their jobs at this level. This is one of the most important slides over that research that I would like to share with you, Excellencies. Here, see, it is so interesting, I think. The authorities and the researchers that, also let me add that this research is done 3 months ago. It's new research in my country. Maybe it works in your esteemed countries also, or other areas if we localize them. They consider 4 layers for the parties engaged with the SH2 businesses issues. First layer, as you see here, is the SH2 business themselves layer. For example, the quality of public goods. If we don't provide for them enough infrastructure, so they can play their own special role at that area, at that region. So needed that we think about that, we cooperate with them about this issue. Second layer is 5 markets. When SMEs produce their products should sell somewhere. Or when they need raise the money, so again, they face with the market, capital market or money market. Or when they want to recruit the employees, they are facing with the labor market. And third layer is policy-making layer. The authorities, for example, here, the Ministry of Industry and Mine in my country is the policymaker of the industrial company as stage 2 businesses. So they have their own opinion, they own strategies, their own ideas about the solution alternatives to support of stage 2 businesses, either from financing them or helping them to sell their production. And finally, upper than all these layers, we have governance layers. Again, member of the parliament or a cabinet issue their approval related to industrial companies. So, for example, about the last layer, third one, governance of the financial provision system. So this part is related to our role as a DFIs. At the same time, the DFIs have the role in other layers. I believe, and I want to share this issue with you, Excellencies, that DFIs can play their own role in every layer. For example, at the first layer, provide for stage 2 businesses loan, either fixed loan or working capital loan or other banking services like credits, guarantees for them. But about other layer, it seems that DFIs should play a different role, that is advisory role, or maybe sometimes policy maker, play as the policy maker. So they should have a close cooperation with authorities, with related ministers and members of the parliament to find better solution for supporting of stage 2 businesses that we think they are SMEs. I am worried about the time, so I skip some slides. I promised the staff. But just about the topic, when we are facing with these 4 layers, seems that we need to have approved national policies. So under these policies, stage 2 businesses, DFIs, other private banks, other parties are working. For example, about the increasing the industrial sector's share of domestic output and boosting its value added by some alternatives. This is the policy of the authority in my country. To achieve a good and optimal growth of the industrial companies in the country. Or knowledge-based, selecting knowledge-based companies. So if it is a main policy of the policymaker, so other parties as DFIs should be respectful to it and help to it. So Mr. Moderator, say me that time is finishing. I will continue some part of other slide in other part of the panel. Just let me, to explain about this important slide, which is the issue that key business issue, problems, challenges that faced by stage 2 businesses, by SMEs, at least in my country. You can see here different issues that listed here as what is happening for stage 2 business in my country. For example, difficult caused by foreign exchange policies and bureaucracy. About bureaucracy, everyone knows that
you should conclude your presentation now.
Yeah, okay, sure. And here also, you can see. Thank you so much.
Thank you very much,
yeah.
Dr. Haidari,
Thank you,
for your
sir. Sorry.
comprehensive presentation. Anyway, what remaining, I think, during the Q&A, you can tap on the other sections you have not covered. We couldn't have time. Mr. Abdullah, please, floor is yours. You have also 8 minutes window.
Bismillahirrahmanirrahim. Assalamu alaikum warahmatullahi wabarakatuh. Your Highnesses, Excellencies, distinguished guests, my distinguished panelists. We spoke a lot as a DFI, especially on inclusion and what inclusion means to DFI as the development financial institutions, and what are the things that we need to do, not just on particular supply chain, but also the entire ecosystem. So Stage 2 businesses is something that is very apt for DFI, and we, you know, in my context, I'm the CEO of Bank Simpanan Nasional and National Savings Banks of Malaysia. It's probably fair for me to just do a quick introduction of who we are. So this is who we are, National Savings Bank of the country. We were established in 1974. As the savings bank, and our sole purpose was very clear, as the name speaks for itself. But more importantly, at that time, in 1974, it was about how many people have banking accounts, and what's the coverage of people in Malaysia that have banking accounts. So I'm quite sure we all would agree today it is no longer about, inclusion is no longer about how many people has banking accounts, but rather how much or how many, what's the coverage of people who have financial access. So now we are proud to serve the nation. We have presence in almost 97 or 98% of all the small districts in Malaysia. We are the leader in the industry with almost 66% of market share. We do have 40 microfinance centers around the country. And very importantly, we have more than 2,000 agent banks, and this is agents that would serve very primarily what a bank branch could do in remote areas, especially in the country. So in this discussion, I would just look forward to sharing. It's tough to speak before lunch. I know Mr. Moderator is going to remind me very, very soon. But I'll make it very compact and also probably keep some slides, especially on the definition of what Stage 2 businesses are. I think that's probably given in our context as a DFI. But just very quickly to just to recap on what my previous panelists have mentioned, this is where we think Stage 2 businesses are focused on. If it's just the UN global impact definition, it's probably on phase 2 and phase 3. These are, you know, from a sustainability point of view, efficient, efficient and strategic, and probably on a more academic definition of what Stage 2 businesses are. These are probably the businesses that are in survival mode. The businesses are or have achieved stable cash flow and covers operating costs. This is businesses that are going to scale. Now, where does BSN fit in this picture? So BSN, again, a very important component of the entire financial inclusion ecosystem in Malaysia, enables Stage 2 businesses. So we see ourselves as the natural starting point for Stage 2 businesses, those businesses that are taking their first critical steps beyond survival and towards scalable and sustainable growth. So unlike many mainstream banks, the DFI like us focus a lot more on the gap between those that are heavily served already by the mainstream banks against what probably would be a gap. So just on context basis, micro definition in Malaysia is anything that is less than 300,000 revenue a year or employs less than 5 people. Anything beyond 300,000 ringgit, this is in ringgit terms, up to 3 million is a small category. So just probably on the next slides, I would like to just maybe introduce 3 point of views and probably have that discussion around these 3 point of view. Point of view number 1 is very simple. It's basically looking into businesses, stage 2 businesses that are backbone to Malaysia's inclusive and sustainable economic growth. Now, just some statistics. SMEs contribute 38.4% to Malaysia's GDP, equivalent to 613 billion as of 2023. And then SME employs 7.86 million Malaysians, representing 48.5% of total employment. And SMEs account for 17.3% of Malaysia's total exports. So again, clawing back to what BSN does, so we are very central in terms of how we finance these businesses. Very importantly, it's to nurture. I think if I could just tap on the earlier discussion or the earlier panel discussion, a lot of it also centered around how do we, we have matrices, we have a lot of KPIs centered around DFIs as the mandated development institutions in the country, in our respective countries. But one very important component is how do we actually measure the impact? Because a lot of it are very activity-based. We roll out initiatives because we thought those are the best initiatives that we could think of. But very rarely sometimes we measure the impact of those activities and initiatives that DFIs have rolled out. So in particular, the government of Malaysia has mandated a unit that measures all activities of DFIs. So it's good to have all those initiatives rolled out, but what are the actual impact to the economy? How many, what is the percentage of growth in terms of job creation? How many of these SMEs in particular have improved in terms of their ability to hire more people? And in those realm of what DFIs need to do, and how do we create the multiplier effect to the economy? So some of these things that it's very crucial. It's nurturing the SMEs to the next level, and also providing the tools and also the infrastructure. Maybe just very quickly on this is the next point of view. The stage, why am I here? Hang on a minute. Yeah, so this is point of view number 2, of which some of which I have covered. 30 to 40% of micro SMEs in Malaysia have adopted digital solutions. The 12th Malaysian plan has a very high onerous target of 100% adoption of digital among micro SMEs. So this is a very high target. Now, why this is important? If I could just give a very simple example. So we have, as a country, wanted to adopt cashless society. I mean, it's a very loosely used term. And we realize why this is difficult is because a lot of, in the more rural areas, a lot of merchants are still adopting cash. And that does not bode well with how we could actually bring about a cashless society. So what DFI like us do is to be part of the ecosystem, to not just go onto the retail space and tell people, look, you need to have your banking accounts digitally, you need to be transacting online, etc., etc. Because some of these people, when they go back to their communities, the merchants are still operating via cash. So one area that is quite crucial for us to ensure the adoption is to make sure that the merchants are equipped with digital solutions. So those are the things that we have done to close gaps in terms of where businesses could scale.
Sir Abdullah, may I remind you last couple of words, please?
I'll wrap up. And just very quickly, the third point of view is really about how we could collaborate between FIs, policymakers, and also international partners. And forums like this would give us good insights and feedback into how we could go back home and also do things differently. I'll conclude there for now. Thank you so much.
Thank you very much, Mr. Abdullah, for your informative presentation. Well done. Michael, floor is yours, and you have another 8 minutes, please.
Good afternoon, Your Highness, Excellencies, distinguished guests, ladies and gentlemen. I'm Ronaldo from the Development Bank of the Philippines, standing on behalf of our President, Michael O. De Jesus, and I'm here to talk about the experience of the premier development bank in our country. For context, those of you who are not very familiar with the Philippines, we are an archipelago, about 7,100 islands, so connectivity is a challenge. In our country, the informal sector is still very large, so they are not yet in the formal sector because most of them are MSMEs. About 99% of registered business in the Philippines are called SMEs, MSMEs, and so they can be considered as in the stage 1. And as a development bank, we want to be able to bring them to stage 2. Maybe about 20% of the population can be considered poor. We are not yet adapted to digitalization. In the countryside, people use cash and may not have access to technology. Now, the Development Bank of the Philippines has been in existence for over 7 decades. We were born in the aftermath of World War II, and we find ourselves very relevant in times of crisis. For instance, during the COVID pandemic, DBP, the bank, found itself very relevant, assisting enterprises needing to survive. And at this point, I'd like to walk you through some of our experience assisting the base economy, the backyard industries, and how we move them into the formal sector. So this is going to be the structure of my sharing. First off, DBP is heavy into infrastructure lending, and some of our priority sectors include the transportation sector, the renewable energy at the far right, sustainable energy like the electric cooperatives. Now, the country being an island, we also finance maritime, logistics, air, and urban mass transport systems to encourage connectivity across various islands in the country. And what is very important in this slide, sorry, I need to wear my glasses. Most of the companies that we are financing at the start did not have access to funding, and DBP has helped them grow with more concessionable terms and more flexible financing options. On the second slide, DBP is also into agricultural financing. We have our sister bank here, Land Bank of the Philippines, but DBP is more into financing the agricultural value chain. And in this regard, I'd like to emphasize that our financing products have encouraged production capacity and integrated many of the small businesses into the mainstream economy because we have funded equipment, facilities, storage that would enable them to scale and grow. Now, inclusive growth is a mantra that we take to heart very seriously. And in our financing models, DBP strives to help industries boost their capacity, become more efficient, and in this regard, we accelerate progress in the economy. Now, you may want to hear some of the success stories of DBP as a bank, how we have been able to help industries to scale and thrive, and how we as a bank call ourselves really the catalyst for national development. In our country, most of the younger generation would not even know the Development Bank of the Philippines, because as catalysts, we work silently. We work as partners for development. Our presence cannot be seen more obviously many times, but we are always there for the transformative and resilient nation building.
Ronaldo,
Yes?
120 seconds left.
Okay. So there are many success stories. One success story is backyard integrated farming. This firm has been helped from a small business to now about 2,600 heads of meat, heads of swine, and 260 metric tons of meat. Here is an example of DBP financing both individual farmers, and the financing program has helped increase the members of the cooperative from 3,500 to about 8,650. And this, on the right side, is a financing to an organized cooperative who said that because of DBP, they have experienced transformation in their local cooperative. This is a financing for sustainable farms and futures, which benefited 1,025 coconut farmers. In all these slides, I'd like to emphasize the formalization that happened when financing was brought to stage 1 businesses. So from non-inclusion to financial inclusion. And I think the success formula that DBP has aptly implemented through the years, through at least in the last 5 years, is the anchor firm approach, where we finance the bigger firms who actually source their produce from the smaller enterprises. So we are able to create the ecosystem that will enable development to flourish and be sustainable. Okay, this is an example of a diagram that has been very successful for the fishery sector. All the other things I may mention during the open forum. Thank you very much.
Thank you very much, Ronaldo. Thank you, our dear panelists, for your comprehensive presentations. There was always so many to say than the allotted time. Anyway, they will have enough time for Q&As, and maybe you can tap on those areas that you have not had time to touch base on. So we'll start our Q&A session. We hope we'll give you time to interact with our panelists. My first question will go to Dr. Haidari. You've mentioned in your presentation sustainability. So we would like to know from your own experience, how do stage 2 businesses incorporate sustainability in their operations? And give us an example.
I think for answering to this question, we should pay attention to two abbreviations. SDGs, Sustainable Development Goals, 17 factors there are which approved and published from 2015 in Brazil. And also at the same time, EDG, ESG, environmentally friendly projects, social projects, and corporate governance projects. So with respect to these two top issues that show to us the framework, so if a stage 2 business and SME is in the, has paid attention to the SDG goals, at the same time is employing the ESG goals. So we can say that that SME is playing in the sustainable objectives. What I am meaning is that, for example, one project that is thankfully ADFIAP winner at this conference is Lentec project. Lentec project, and this project is run in an underserved area in the south of the country. A Lentec project is playing its role in the financial inclusion. Financial inclusion is one of the part of 17 SDGs. At the same time, what is the role of Lentec project? This type of projects help to access the people to get loan, not allow to people, as we had in the last panel, our friend were talking about it is needed to have guarantee from the customers or not, how much will be the guarantees or not. So with respect to this issue, we see that running this project in underserved area will help to developing that area. So, and is one of those factors of ESG. Which of them, I think, social index of that abbreviation. So, when this project is helping to social objectives of ESG, so we can consider that this project is playing its role for developing that area and also the neighbor area of that area. Finally, we consider it as a sustainable project.
That's a very good answer. I just want to build on that. How these companies can feel the benefits of this sustainability and how we incentivize those companies. Is it an experience you can share with us? It's very important for the stage 2 companies to feel the benefits.
See, when we run a Lentec project, let me explain more about this project at that area. First, it create, this is our current discussion about the stage 2 businesses' role in every region. They create jobs at that region. They, help the people who don't have enough access to get loan from the banks, and at the same time, they are, they have their own innovation. Again, I am emphasizing that innovation is another part of 70s SDGs indexes. So when we have innovation, when we run innovation projects somewhere in the country, so they are affecting that area and their neighborhood and cause that, that area imagine as the developed area, at least start to develop and slowly affect other neighbor and other people. For example, not allow people migrate from that city, from that province to other more advanced cities or provinces.
Thank you very much. I think we'll move on. Mr. Abdullah, you mentioned in your presentations the different characteristics of the segment 2, but we would like you first to shed more light on what differences those stage 2 have over other segments of the business.
Thank you, Your Honorable. The differences, I think, we've discussed a lot in our presentation slides between, how do we differentiate what is stage 2 businesses, etc. But probably, Your Honorable Moderator, what are the distinguished characteristics of successful stage 2 businesses? So in our views, understanding local requirements, local knowledge, local tastes, for example. In our success stories in Malaysia, we have got this startup called Ramly Burger. This was way, way before. This is not your typical McDonald's and Burger Kings, but these are street burgers that you find at every corner of your street. So they understand the local communities very well. They know what the local communities want and look for in their burgers, and they tailor to very specific needs of these communities. And today they employ almost more than 25,000 employees in Malaysia, starting with just a very simple setup, selling burgers, to very entrepreneurial mindset business people, who now employs more than 25,000 people. And there are incumbent McDonald's and all this, they are still surviving, they're still thriving. So that's one very key component. I think the other one is with the adoption of digitalization today, with adoption of, we've discussed how data is very key. Adopting these early adopters of digitalization is also one key distinguished factor that would differentiate between how a business could thrive and be successful, especially for stage 2. Adoption of AI, etc., technology solution, that's probably another day's discussion. But these early adopters have proven time and time again in our specific scenarios in our country, coffee maker, like, we've got this business called Zeus Coffee. All they do is they are basically challenger to your regular Starbucks, etc. But they understand the local needs very well. They are early adopters of technology, and they are thriving very well in our country, and they are opening up outlets like, it's mushrooming like in every other day's business. So these are things that have enabled stage 2 businesses to continue to thrive. And I think that's probably a key important sharing that I would like to share.
Excellent. Thank you very much. Can you share with us some examples of companies that survived through the early stage startups?
Yeah, I think.
Sorry.
They can't hear your question.
He can hear me, but you cannot hear me. I'm just asking Sir Abdullah if he can share with us examples from his community, companies going through this route, and they have proven that they can support the community, and the characteristics of this company really stands out very, very clearly.
Yeah, so I am mindful about lunch, that we are standing in between that, so we'll make it very quick. But again, Your Honorable Moderator, we wanted to touch a lot more on how stage 2 businesses could thrive. And they are very different in terms of their characteristics in different regions, in different places where they have come about doing business. So in our particular examples in Malaysia, they are all unique businesses. One clear example is what we call we call them Kasem. So, sorry, they call themselves Kasem. This is a company that basically does buying and selling of used cars. And it's such a simple business. They connect and they enable through platform. So it's no longer the need for us to go to a used car dealer to look for our used car. These are all using technology. So Kasem has come around, and from a very early startup, they have been very, very successful. Today they are listed in our jurisdiction. And there are many other early adopters. In our particular case, I would like to also share that the earlier panel has discussed on non-conventional funding. So back in Malaysia, we have this program called iTekat. It's simply a matching grant. We also recognize, in that whole economic pie, that there are aspiring business entrepreneurs that may not have the capacity in terms of knowledge to do business or funding. And this could be from the very poor segment of the society, but they do have very good business acumen. So how do we facilitate them? So the government has come around to say that, look, banks and the government will match whatever that the banks can come up with. So the government introduced this matching grant and says, if banks will participate and identify who are these poor people, but they are people with business acumen and ability to do business. Let's identify and let's help them to be part of that whole business ecosystem. So to start with, we use several concepts of Sharia. We start with Hibah. We practically just give them the grant, whether it's working capital or whether it's just CAPEX, and then we graduate them. So the very important part here is to handhold them, to enable them to the next stage where we could then give them a very simple cord financing, which is zero profit rate, right? But they are then, the ability for us to make sure that they thrive. There needs to be a modular system to make sure that there are trainings provided, etc., etc. So the end game here is to nurture them into successful businesses. So this program is gaining a lot of traction. The Prime Minister in his speech has said or has called out banks that have not been participating, and that's how normally it gets very effective.
Thank you very much. Ronaldo, what will be the next step the Development Bank of Philippines to take in order to support this segment of the ecosystem?
I believe we just have to continue lending. So that's one. We should not shy away from firms which need financing. But we cannot be everything to everyone. So we need to expand our network of partners, especially, for instance, the rural banks who are closer to the market, to the firm or to the individuals which we actually want to support because they are nearer the ground. So that's one. Second, for DBP and maybe for some who are in the same situation as the Philippines, our presence should be more felt, both digitally and physically. In the introduction, I told you that we have 7,100 plus islands. It's hard to be present in each of those, but there is necessity, especially in concentrated population, places where there is concentration in population, to have physical presence. But digitalization is also key for us. So we're doing that. In fact, in the anchor firm approach, which I shared earlier, some of the successful intervention, even in agricultural financing, the successful programs of DBP came about because of our partnership with fintech companies. So they're the ones who are bringing the financial support that we are extending to the end market. Another for us would be a strengthened collaboration with our government partners, because government usually comes up with program, capacity building, and other technical trainings, but if they are linked to finance, it becomes more efficient.
Excellent, thank you very much. This final question for you before we open the floor for discussion. I think we are approaching 10 minutes. Excellent. So last question for Ronaldo. I would like your thoughts, how we can benefit from the outcome of this session to deploy it in our policies in order to support this segment, stage 2 segment. Yeah. Yeah.
Again, speaking for our own country and our own financial rules in the Philippines, we hope there can be a lower risk-weighted asset, or lower risk weight for small businesses to encourage financing among even commercial banks, not only development banks. I mean, the lower risk weight assigned to loans granted to stage 2 businesses. It has not happened yet in our country. We have not lobbied yet for that with our own central bank, but it is perhaps a direction that we can pursue. So that's one. Second, on what we can control as a bank, we should be streamlining our requirements for small-scale businesses, because sometimes we have the tendency to demand the same set of requirements we require from formal businesses. And third is encouraging our own institution to level up our digitalization, because some of the firms we want to reach to would encourage transacting with a digital bank. Thank you.
Thank you very much. Thank you. Thank you for your comprehensive answer. The floors now, we'll open the floors for our audience to interact. We will take, I think we have 2 questions. Yeah, 2 questions. Let's be fair. 1 question for male and the other for female. Front and back. Okay, the first question, first row. No, Hussein will leave you for the time being. I think there's a gentleman over there. He was the first one to raise his hand. Yeah? Microphone over there. Please. Okay, your name, your title, and whom you want your question to be addressed to.
Okay, Assalamu alaikum rahmatullah. My name is Al-Khidr Muhammad. I'm from High Fall. I'm a delivery consultant. And I have a question for the 3 speakers. The question is about the adoption of the blended finance as an approach to use the finance strategically, the investment finance strategically to achieve the development. I'm asking if the 3 presenters having, used or adopting this, strategy to upgrade the financial system to achieve development or not. Thank you.
We'll take another question. 1 second. Another question, and then we will come back to you. Second question, this should be female, please, if possible. Unless they give up to the male side. No, I cannot see any hands up. So then it is back to our male audience. I cannot see any hand. Then Khamis Sabahi is there. خميس لا يكون سؤال صعب الله يهديك. As easy as possible, because I know he's a corporate man.
Direct to the question. My question is, how can we, and my question to Mr. Ronaldo, how can we balance helping a company transition to stage 2 with avoiding unplanned expansion that could lead to negative consequences?
Back to you. First question, adoption of the finance. Mr. Dr. Hydri.
About the question of our friend, financial system strategies, I think, I want to emphasize on my presentation that I believe DFIs can play 2 roles at the same time. I mean that providing facilities and other banking facilities for the DFIs, for the stage 2 businesses, additional to other private banks and financial institutions that provide funds for the customers here in our panel, stage 2 businesses, is common. Additionally, I think that we need pay attention more to other aspects of supporting of stage 2 businesses. Those are advisory to them, give our advisory point of view to them. For example, our advices about reducing bureaucracies, about correcting their processes, or what are the true and better instruction and rules for their business.
Gentlemen would like to add? Please.
I think the first question is on blended finance.
Finance, that's right.
Okay. So we have many examples in our bank, and one of the things that I've shown earlier is on our jeepney modernization program. So some of you have gone to the Philippines. We have these World War II repurposed jeepneys that are still plying the streets of Metro Manila, and they're clogging the transportation nodes. And our government has planned to modernize them. And in the blended finance approach, so government has a contribution in the supposed equity of the borrowers, while DBP finances, and together with our sister bank, Land Bank, the majority of the financing needs of this government. So it makes our bank manage our risk better when we do blended finance. On the second question, sir, you were saying how do we mitigate, how do we avoid the negative consequences? You know, banking is a business of risk-taking. And I know most banks have been burned and in their various financing activities, but the best approach maybe is to pilot small-scale lending, and then we learn from the experience, and then that's the time that we expand. Because, and second is cooperating, coordinating with instrumentalities, agencies, and institutions who have a role to play in the finance that we are actually offering to the particular market that we want to reach out to. Thank you.
The bell has already rung, and I just would like to thank our distinguished panelists for their valuable answers and comprehensive insight. Thank you very much. Thanks to our audience for their interaction, and we conclude our session. Thank you very much.
Again, as with all of our sessions, just to formally recognize the invaluable time you've spent with us and the contributions, I would like to request Mr. Thimal Pereira, CEO of DFCC Bank of Sri Lanka and ADFIAP board member, to join us on stage so we can give a small token of appreciation to the moderator and the panelists. All right, we'll kick off the appreciations with the name calling and the person joining us in the center after they've arranged themselves. Kicking it off with the Honorable Engineer Mohammed Al-Ghassani, Member of the State Council, Sultanate of Oman. A round of applause, ladies and gentlemen. Followed by Dr. Said Haydari, Deputy Managing Director, Financial and International Affairs, Bank of Industry and Mine, Iran. Mr. J. Abdullah, CEO, Bank Simpanan Nasional, Malaysia. And last but not least, Mr. Ronaldo Tepora, Senior VP, Development Bank of the Philippines. All right, once again, thank you to our moderator and speakers. We'll take a group photo, and we will now be able to go for lunch. Of course, let's not forget, it's a networking lunch, so please use this opportunity to get to know other delegates and other people. And we will be seeing you back here at 2 sharp, inshallah. Thank you very much, and we'll see you later.